G'day guys, welcome back to Pizza Investing. It's December 22, 2023, the weekend or the last day of trade before Christmas. This is the US dollar technical analysis. So what we're looking at here is in a short term on the hourly, we did hit a target on our divergence. So let's look at that on the chart and see what it looks like in more detail. First off, on the overall, on the weekly and daily, we're still in a downtrend. I'll talk about the hourly in a minute, but let's look at the weekly first off. You can see the CCI 400, our trend indicator, is broken below its moving average and turning bearish. The CCI 150 we use as a divergence indicator is trending in line with the price, and no sign of a divergence on that yet. So weekly is bearish. On the daily, likewise, the CCI 400 is broken below its moving averages. The CCI 150 is also trending in line with the price. Again, no sign of divergence. And we have got this support at 99.12, which we expect it to hold, maybe, but we've also got this resistance up here at 10.697, which it bounced off. So I'll keep an eye on that and see how it goes in the coming days or weeks. On the hourly, however, we did, on our last video, we had this big bearish candle and it sort of paused there around the 78% level of that Fibonacci range. You can see there we had a little bearish divergence there. It came down, hit our target, bounced up to that recent high, and then bounced again down to the downside. And that was in line with this CCI still falling in alignment with this previous divergence. So you could possibly have extended that, and eventually it did fall. Now it fell off well below the 100% retracement level, and it's now giving us a double bottom on this point there, and I'll talk about that in a minute. But in the short term, we did have this bullish divergence compared to the price there, and that actually hit our 23%, 38% target. So if I take that to the previous high, which would have been that point there, you can see there I always like to choose the closest Fibonacci range, and that would have been between that 23 and 38% level. So you can see there it hit it quite nicely, went along that range for some time, for a number of hours, and then finally started to drop off again and giving us this double bottom. Now, we still have a divergence here, a bullish divergence. So if I measure it from that point to there, you can see there it's consider it a double bottom on the price versus from that point versus the CCI, that's a bullish divergence. So again, that could still bounce from there. That could be a slight retracement like it did back here, or it could be a longer term higher bounce more to the upside. Now, if I zoom out again, primarily I like to go short in this case when the weekly and the daily are short. Only take short trades with the exception of these divergences. So if you see a divergence, don't take any action in that direction until we see this play out. Now for this to fail, for this divergence to fail, we need to see the CCI fall below this entry point back there. It needs to fall down to there, and by that stage we'll see the price also collapse. So long as that CCI remains above that point, we're going to have it consider it a bullish divergence. So that's where we are at the moment. Longer term bearish, but in the short term, just be careful of a bounce. So don't go short at this point until we see the divergence fail. So that's where we're at the moment. Previously, we did have a bullish divergence, which a target hit, hence the title of the slide. So if you got value out of that video, hit that like and subscribe button, hit that notification bell. Thanks for watching. Merry Christmas, and we'll see you in the next video, most likely in the new year. Cheers, and Merry Christmas again.